Hey, what's up guys? My name's Daniel Lopez with Invest in You Finance, and today we're going to be talking about how to invest in the stock market. In this video, I'm going to show you guys how I invest in the stock market using my health savings account. It's very important that you guys know that just because you are signed up for a health savings account doesn't mean that the money that you're putting in is going to be invested. So it's important to go into your account and make sure that you have chosen a fund to invest your health savings account money into. I want to go over a couple of things on how I choose my funds inside my health savings account. And those two things are the expense ratio and the rate of return over a period of time. I typically like to look at 5, 10, 15-year rate of returns, and that will give me a good idea of how the fund performs. What is an expense ratio? An expense ratio is basically how much the fund managers are charging you for that fund to invest the money inside of it and cover their expenses. Whenever you see the rate of return on the stocks that I'm going to show you, that already takes into account the expense ratio. I like to choose low expense ratios and high rate of return funds. In the video, I'm going to show you guys how I select my funds in my account and what you can be looking for in case you want to invest your money in your health savings account. I like choosing the higher rate of return funds for my particular situation. I'm young and I want that fund to grow exponentially over time. If you're older, you might not want to have a fund that has big swings in the market. So you might choose a fund that's more stable and more consistent with bonds, for instance, which are a lower return fund, but they're more consistent. All in all, it just depends on what you specifically want for yourself. This is just one way to get your feet wet when you first get into investing, because you might have a health savings account, you may have been putting in money, but you might not be invested. So it's important to look into your account and check it out and see what funds you're invested in. In my account, I have to have $2,000 minimum before they can start investing into a fund for me. So after I have $2,000, then they will invest in increments of $100 every month into a fund. So if I don't have $2,000, first I have to accumulate $2,000. Then once I accumulate $2,000, they will invest every $100 after that. I've used my health savings account for two pretty big procedures. One was my orthodontics. I got Invisalign on my teeth. Another one was LASIK. I got LASIK eye surgery. So those two procedures were a pretty big expense. Guys, I have another video out there that shows you how to reduce your taxes by investing in a health savings account. So if you want to check that video out, I would really appreciate it. But in this video, I'll show you guys how to invest in your health savings account. So I'm gonna go ahead and show you guys the clip. Hopefully bring you guys some value. Check it out, guys. Here it is. Hey, what's up, guys? So we are now inside my health savings account. And inside my health savings account, I have $2,206.88 cash, but I'm also investing $2,085 into a Vanguard index fund. And let me scroll down and show you guys what I have my investments in. I'm gonna go ahead and select a snapshot of the rate of return. But first I have to scroll down and select my account. Okay, here it is. Let me scroll down here. Okay, so here's where I have my funds invested. Like I said, it's invested in a Vanguard total market index, and that's everything that I've invested in, just that one fund. And so far, it's returned in 1 year 35%, year to date 19%, last quarter 8%, and overall since 2019 24%. So here's where you can select what funds you want to invest in. And first, we're going to check the performance real quick so I could show you guys another graph that they give us. It's similar to the other graph that we just saw right now, but basically it says the same thing. I'm 100% invested in the total market index, and here's just a graph of my money since I've been investing in there. But now we can go to see what funds are available. Okay, now that we can see which funds we can invest in, let's go ahead and take a look at the first fund, American Funds Capital Worth Growth and Income Fund. So right away we can see that the expense ratio is 0.42, and that is an average expense ratio, a little bit on the high side, but still that's decent. And then we want to go down and look at the rate of return. Year to date we have 13%. That's pretty good, but I want to see what the historical rate of return is. So 10 years is 11.95%. That's pretty good. But I want to look at something that's more around, let's say, a 15-year rate of return average. Either way, it seems like a pretty good investment. And if we scroll to the bottom, we can see what holdings it has. It has Microsoft, Netflix, Facebook, Amazon. It has a lot of pretty good stocks. And this is just one of the stocks you can choose. So this is what you're going to be looking for whenever you start opening up all these investments you have available. And then you can see if you like them, if you don't like them, and whether you want to invest in them or not. Let's go ahead and select the second fund, which is a large cap blend. Large blend portfolios are fairly representative of the overall US stock market in size, growth rates, and price. Stocks in the top 70% of the capitalization of the US equity market are defined as large cap. Okay, this BlackRock Equity Dividend Extended Fund has a year-to-date return of 16.32%. That's pretty good. Oh, it only has a 5-year historical return history. So I would probably not really consider this fund. I want to see more like 10, 15-year returns. And if we scroll down, it'll show you guys what it has inside the fund as far as the holdings. Wells Fargo, Bank of America, Morgan Stanley, General Motors, those type of stocks. Yeah, I would probably not choose this fund just because of the historical history. And I think the expense ratio is, let me scroll up here to the top, 0.6. So that's pretty high. Okay, let's go ahead and click on the next fund. The next fund is an intermediate term fund, and that is a bond mutual fund that invests in a basket of intermediate term bonds, which are typically those that mature between 5 to 10 years. I typically do not prefer bonds, but let's go ahead and look inside this stock. This is a Dodge & Cox income stock. Year-to-date return is 0.32. That's not that great. Oh, look, it does have a 15-year return of 5%. So, like I said, if you are older and you do not want to mess with the market swings, this is a good fund. So that way your money stays stable at around 5% rate of return. And inside the fund, you have US Treasury notes. So if you're not looking for big swings, this might be a fund for you. In my particular situation, I'm just looking for high rate of returns. But at least this one is a 15-year historical return. So if that's what you're interested in, then you can choose this fund. And the expense ratio is 0.42. Okay, let's go ahead and look at the next fund. The next fund is a Fidelity low price stock asset class mid cap value fund. What is a mid cap value fund? A mid cap value fund invests in stocks of medium sized companies that are less expensive or growing more slowly than other mid cap stocks. Value is based on low valuations and slow growth. Let's see what this fund has to offer. Okay, right away we see it's a 0.78 expense ratio. It's kind of high. So let's go ahead and see what the historical rate of return averages are. 19.62% year to date, that's pretty good. 15-year, 9.79. Okay, that's pretty good. And let's see what the fund has inside of it. The holdings contain Metro Inc., AutoZone, Ross, Anaheim, Monster Beverages, United Healthcare Group. So overall, not a bad fund. And the rate of return is pretty good because it's a 15-year 9.79. So, something to consider, but there are plenty of more stocks to look at. Okay, guys, let's go ahead and look at the next fund. The next fund is John Hancock Equity Fund, Large Cap. Large cap mutual funds are equity funds that invest a bigger proportion of their total assets in companies with a large market capitalization. Okay, guys, let's see what this fund has to offer us. Expense ratio, 0.78. That's pretty high, but that just means that it might be managed more frequently, so the returns might be higher. Okay, let's look. 26.75 year-to-date return. That's pretty awesome, guys. I really like that. 15-year, 12.26 historical return. Guys, that is great. Best one so far. And let's look to see what the holdings are. The holdings include, drumroll please, Amazon. 8% of the portfolio is Amazon. That's pretty high. Alphabet, Class A, Apple, Facebook, Morgan Stanley, Workday, CarMax. So it has a lot of very good popular stocks. So remember, guys, you're investing in this fund. You're going to be getting all those stocks inside the fund. And for me, I might consider changing my investment to this investment. Oh, but look, 1 year it gave minus 13%. Okay, let's pretend you would have had $100,000 inside your health savings account. That means that your account would have been down $13,670. Would you be able to handle seeing your account down by that much? That's just something you have to ask yourself. And the loss would be unrealized because it's only when you sell that you would have had the loss. So as long as you kept the money in the fund, the next year you would have had a 35.39% return, which would have made everything back up. So this is just something to consider, and this is why I invest for the long term. Okay, guys, let's go ahead and look at the next stock. The next fund is a fixed income fund. A fixed income high yield bond, also referred to as a junk bond, pays higher interest rates proportionate to the level of risk investors incur when they purchase them. Okay, let's see what this fund has to offer. Okay, year-to-date return 6.27. That's okay. I don't like this one. It has only a historical rate of return of 3 years. So this is something that I personally wouldn't be interested in, but maybe someone else would. And here is what is inside the portfolio. Like I was saying, guys, I like to look at funds that have a history. Unless I really like what the fund has inside of its holdings. The next fund that we're going to look at is a short-term bond. What is a short-term bond? Short-term bond funds invest in securities that have maturity periods between a year to 3 years and offer high liquidity. So let's see what this fund has to offer us. Right away, we see that there is an expense ratio of 0.46. So that's a typical average expense ratio of 0.46. Not too bad. Oh, but right away, guys, year to date of return is 0.04. That means that if we would have invested, at least we would not have lost any money. So that's a positive note. And we can see over the 15-year period, we had a 3% rate of return. At least it has a good track record. So if you're interested in a fund that does not have too many market swings, maybe this would be a fund for you. If you're older and you're trying to use this money as income, when you're 65, you can pull out of your health savings account. With a health savings account, you have to be 65 years old in order to pull it out for any reason without receiving any tax penalties. That's just something about a health savings account. And it's very important to know that because you could treat a health savings account as a retirement account whenever you turn the age of 65. But let's go ahead and look at the next fund. Okay, guys, hopefully you get the idea of how I pick my investments. Typically, I'm just looking for a high rate of return. I'm not going to go through all the investments, but now that you know how to do it, you can pretty much look at all your investments available and decide which one is best for you. The next fund I'm going to check out will be the Schwab Target Date Fund. Basically, a target date fund is a fund that is risky in the beginning, and towards the end of the expiration date of the fund, the target date, basically it becomes less risky. So it starts off super risky, then becomes less risky, depending on when you're going to retire. And this fund has a 0.08 expense ratio. That's very inexpensive. Year to date is a 7.1 return. That's not too bad, but it does not have a long history. And I would probably not choose this fund because it is not showing me what I like to see. And just remember, guys, this is just what I look at when I'm looking for the funds I want to invest in. There's so many ways that you can look at these funds, but I'm just trying to show you what I've done and what's worked for me. So there's no right or wrong way to do this. Probably just investing in anything is better than not investing at all. So just try your best to think about what funds you want to invest in. Now let's look at another target date fund. This target date fund, year to date, has a return of 16%. That's pretty good. And a 5-year rate of return of 14.16%. Again, I like to see a longer history, so I probably wouldn't pick this fund. If we go down and look at what the portfolio has, it shows inside the fund it has ETFs, bonds, Schwab International, large cap. It's basically a mixture of everything. Because in the beginning, target funds are super risky, and then towards the end of the expiration date, they tend to switch all their funds to less risky investments. And The next fund that we will look at will be, finally, a Vanguard index fund. And an index fund is either a mutual fund or ETF that represents a basket of stocks or index. And this is more of the type of fund that I like to invest in. Right away, we see there's a rate of return of 20% year to date. That's great. 15-year, 10.87%. That is just following the S&P 500 index fund. So for me, that's a great return. Over 15 years, you have 10%. And if we look inside what the portfolio has, it'll probably have a lot of great popular stocks. Let this load for a second. Of course, it has Apple, Microsoft, Facebook, Amazon. It's very diversified. And with a high rate of return, this is something that I would probably choose. So let's go ahead and look at the expense ratio really quick. Scroll up here to the top. 0.04. That is a very inexpensive ratio. Okay, the next investment that we're going to look at is going to be the Vanguard Healthcare Fund. And this fund is mostly made up of healthcare stocks. So this should be very interesting to see what the rate of return is inside this fund. So let's check it out. Right away, we see a year-to-date return of 13%. That's pretty good. And wow, would you look at that, guys? At a 15-year rate of return, it's about 11%. So that's really good. But remember, this is 100% healthcare stocks only. So you're not diversified, but you're getting a high rate of return. So this is just something that you have to consider. You have United Healthcare, Pfizer, and all these other healthcare stocks inside here. So maybe if you're already invested in other funds in your 401k or your personal stock account, maybe you want to invest in healthcare. And because it's giving you a high return, maybe this is something that you're interested in. So this is just something else you can consider to add to your portfolio. Okay, now we're going to look at a Vanguard REIT index fund. And this will be made up of mostly real estate. What is a REIT index fund? Like a REIT ETF, a REIT index fund is a mutual fund that passively invests in a benchmark real estate index, such as the MSCI US REIT Index or the Dow Jones US REIT Index. Let's see what this fund has to offer. Right away, we see an expense ratio of 0.1. So that is pretty high. Year-to-date return, 28.77. That's great. But it has a 15-year return of 7.51. And for me, guys, that is not that attractive. Some people like investing in these just to diversify their portfolios. Maybe in their 401k they have healthcare, or maybe they have other investments, and in their HSA they want to invest in real estate. So that's why they would choose that. For me personally, if it doesn't have a high rate of return, it's not really attractive to me. So that's just something to consider. But you would be invested in real estate through a mutual fund. Okay, last but not least, I wanted to show you guys the fund that I have selected to invest inside my health savings account. And that fund is the Vanguard Total Market Index Fund. Right away, you see that it has a great expense ratio of 0.03. That is fantastic. Year to date, it has a rate of return of 19.87%. That's also very great. And we have a 15-year rate of return of 11%. That's not the best out of all the funds that we've gone over, but it's pretty darn close. The reason I like this fund is because it's heavily invested in the healthcare industry and the technology industry, which are two sectors of the market that I really like. And if we scroll down here, we can see technology 24% and healthcare is 13% of the total investments inside this account. Right now, we'll scroll down to the holdings and we'll see all the funds that this index has selected to invest in. So right now we can see the holdings include Apple, Microsoft, Amazon, Facebook, Alphabet A, Alphabet C, Tesla, Berkshire Hathaway, Nvidia, and JP Morgan Chase. All these are stocks that I like, and because this is an index fund, it's basically tracking the stock market index. Now I wanted to show you guys what could possibly happen to my health savings account if I leave this $2,000 invested in this index fund. Let's say that I pull the money out when I'm 65 years old and this account grows for 31 years at 11% interest rate. At the end, I will have $50,000. Now let's say that hypothetically you contribute $3,000 every year for 40 years at an interest rate of 10%. You could potentially have $1.3 million. Now that we know how to invest in our health savings account, I want you guys to go into your health savings account and see what funds you have available to invest in. It's very important to make sure that your money is growing inside your health savings account. So now that you guys know how, hopefully this will help you guys out. And guys, remember, this video is for entertainment purposes only. I'm not a financial advisor. I'm just showing you guys what I've done in my accounts and what has helped me build my financial independence. I wish you guys the best, and I want you guys to grow and increase your net worth. So please guys, like and subscribe. I really appreciate it. If you're tuning in and this is your first time, thank you so much. Please check out my other videos. I talk about my 401k, I talk about the stock market, and I talk about everything that has to do with personal independence and finances. Thanks guys, and I'll see you guys next time.